Welcome to Insightful Value, where we spotlight strong companies flying under the radar. Today's target, Gamma Communications. The UK-based Telecom stock is down, but is that really the full story? Let's unpack what's behind the dip. This video is for informational and educational purposes only, not financial advice. Gamma Communications might not be a household name globally, but in the UK and parts of Europe, it plays a vital role in business connectivity. They specialize in cloud-based telephony, unified communications, SIP trunking, and data services, helping businesses shift away from legacy phone systems toward VoIP and fully digital infrastructure. Think of them as the digital plumbing behind modern enterprise communication. The company operates across the UK, Netherlands, Germany, and Spain, serving over 100,000 business customers, including a large number of SMEs. Gamma's growth was robust through the pandemic as companies rushed to upgrade remote communication systems, but the post-COVID normalization has cooled expectations. That cooling is exactly why the stock looks attractive today. As of mid-2025, Gamma's stock trades around 15-20% lower than its 2021 highs, and its forward PE is now below 15, significantly below sector averages, especially for a company with no debt and consistent profitability. For FY 2024, Gamma reported revenue of $546 million and adjusted EBITDA of around $106 million. Their EBITDA margins remain strong at roughly 19 to 20%, and free cash flow conversion is healthy, two things value investors love to see. Their recurring revenue base and long-term contracts create a stable cash foundation, allowing for shareholder returns and strategic acquisitions. On the dividend front, Gamma has steadily increased payouts over the past few years, now yielding about 2.4%. It's not a high-yield play, but the reliability is there, backed by a very conservative balance sheet and disciplined capital allocation. The company continues expanding its product suite, especially in cloud contact centers and Microsoft Teams integration, which should drive stickier client relationships. However, there are risks. Growth is slowing compared to previous years, partly due to saturation in mature markets and increased competition from larger telecom and IT players entering the space. Also, while Gamma's balance sheet is strong, its growth strategy relies in part on acquisitions, and those don't always pay off as planned. So why consider Gamma now? Because sometimes the market punishes a stock for slowing relative growth, not absolute performance. Gamma is still expanding, still profitable, still generating cash, and doing so while many of its peers carry significant debt. Insightful Value is all about identifying these kinds of stories. High-quality companies that get mispriced during market noise. We simplify the data, cut through the jargon, and help you discover companies worth your attention. Whether you're a cautious investor looking for defensiveness or you're building a portfolio of underappreciated tech-adjacent stocks, Gamma might be worth a deeper dive. For more detailed analysis of Gamma Communications and other undervalued opportunities, visit insightfulvalue.com. And don't forget to like, subscribe, and follow us for more in-depth breakdowns without the fluff.